All right, and we are live. Good morning. Good morning. Welcome to Coffee Time with Marie Teresian, CPA. Hope you're enjoying the music.
I am enjoying.
Exciting, energetic. That's what I like. I know it gets us going every morning. So, welcome everyone. If you are returning to the show, welcome back. We love having you. If you are new to the show, give us a thumbs up or a hands up in the chat so we know you are new and we welcome you with open arms. Go ahead and please make sure to subscribe to the channel that you are watching us on, whether it's on Facebook, on LinkedIn, or YouTube. Please subscribe, like, share so that others can actually learn some of these strategies that we are showing and talking about every Thursday at 10 a.m. Eastern Time. I am your host, Marie Teresian. I'm a CFO and an auditor, certified public accountant, and a chartered global management accountant. I use my proprietary methodology, Valuation MT, to help business owners that reach their first million to 10x their profits. I've also created an e-course based on that methodology, which is available on my website, www.theprofitlab.biz/programs. And I also have written a couple of books. The Business Owner's Guide for Operational Accounting and a Complete Guide to Business Growth. Those are available on the website as well, www.theprofitlab.biz/shop. I'm also a Grant Cardone licensee, and I coach businesses on sales, marketing, finance, and mindset. And so I have made available multiple business coaching, group coaching sessions available to you on my website as well. You can check those on www.theprofitlab.biz/plan-pricing. We have a very important webinar coming up. It's a free webinar to you guys. It's going to be tax smart strategies for real estate professionals. That's coming up on August 5th. With yours truly, the trainer of the day, our guest trainer, Mr. Pedro Gonzalez, my friend and tax colleague. It's going to be exciting, Pedro.
Good morning, everybody. Pedro Gonzalez, your business and tax strategist from South Florida. Wonderful weather. We're here to help you with your tax planning, your cash flow. Cash flow, like I keep saying, is lifeblood of any business, and your exit strategies. We are all going to exit. It depends on how we're going to exit. I also have an ebook that is available. We have it now on a link on our website. I will send it to Marie. If you go to Pedro Gonzalez, pedrocpa.com/resources, you'll find it there.
That's awesome. Awesome. And then we're excited about the webinar coming up August 5th. Want to tell us a little bit about what our listeners and our audience watching us today can expect from that webinar next Friday?
Yeah. Very good.
Are you having technical difficulties, Pedro?
Yeah, it is frozen, Marie.
Uh-oh. We can hear you.
It's a little bit choppy.
We can hear you.
Well, let's talk about the conversation we were having earlier today about the compensation. Is that
yes? So, can you are you hearing me better now?
I cannot hear you. I don't know if other people can hear you. I don't know if it's only on my end,
Hmm.
but
Let
for
me
for
see.
reason it cut. It's kind of choppy and you're frozen. But I know that we have a good topic. I mean, this is something that we hear a lot, especially if you're established as a limited liability company. And many times people wonder how to get compensated, how you get paid when you're an LLC. And I'm sure you have encountered the same kind of questions. But today, the goal of today is to explain how you address the situation. I mean, how you pay yourself while staying within the IRS guidelines. So again, one of the most frequent questions that at least I receive from small business owners, especially when they're new into the LLC environment, is how do I pay myself for my business? So
Mhm.
if you're a sole proprietor, the answer is pretty simple. I mean, you take draws. But if you're set up in operations, a small business and LLC, then it may get a little more confusing for the business owner. Now, the answer to the question, typically the question comes something like, me or myself as an owner or LLC member, can I pay myself wages? Or if me and my wife are owners of the LLC, can we get compensated through wages? And the short answer is no. And and the reason is because by default, an LLC, and we have had this conversation before in the prior podcast, how the IRS views an LLC.
Mhm.
So the reason is because the LLC is taxed as a sole proprietor if you're a single member, or a partnership if you are more than one member. This is assuming, again, if you make no election, you form an LLC. This is the two options that the IRS is going to address it. So if you are a single member, sole proprietors do not pay themselves wages. And if you are taxed as a partnership, well, partners are subject to different tax rules for the IRS, which causes a lot of confusion to
Right.
many business owners. And the reason is because the IRS view of an individual is he or she cannot be both a partner and an employee
Employee.
for
Correct.
purposes of wage withholdings and payroll taxes and so on. And so that's the kind of, and I don't want to get into the nitty gritty of the details of Revenue Ruling 69, but that's basically the foundation of this is Revenue Ruling 69-184, which it basically states, and then again, I'm just simply simplifying it for you, is that this is for the IRS and taxation, is that a partner cannot be both partner and an employee for compensation. And so because of that, the partner cannot pay himself or herself through wages of W-2.
Right. Right. Absolutely. By the way, Pedro, do you hear me better now?
Not really. I mean, it kind of comes up, but I can let's continue. Maybe I can be able to.
Okay, so one of the other questions, and if I may, just to take a quick moment to briefly remind everybody that, some of the stuff we've covered also, guys, we didn't get to do a quick summary of past discussions just to make sure you guys can check out as well, is, we've talked about different types of tax situations, for partners, for LLCs, but not necessarily on compensation. We have talked about employee tax retention credit. We've talked about E2 investor visas. We've talked about financial analysis, IRS tax audits, financial audits. So please make sure to go check some of those prior episodes for that type of information. So the next question I wanted to bring out, Pedro, and it was related to whether partners can be paid a W-2, and which you've answered already, is and by the way, guys, this was a Q&A that came from our clients. So this is why we love getting questions from our clients. Is can a managing partner that is planning to sell the business be required to stay on for multiple years? The key word being required. based on your experience, because as an exit strategist, you see this
Yeah.
happening quite often. So,
Yeah, this conversation is quite interesting about being required to stay. Correct? The one that we were discussing. Yeah, when a person is getting ready to sell their business, I think it is could be an added value for the owner to be willing to stay in the transition to help that transition period. I think it's a good idea. I think it adds value, but to be required to stay for a specified number of years or whatever, I think that's to be negotiated between the buyer and the seller. I have
that's
seen
yeah.
different models on this. Either be that the owner is not quite ready to, to end his or her involvement in the business and wants somebody. Basically, I can stay in to continue some of the day-to-day, let's say for example teaching, so I want to
Right,
continue
right.
teaching, but I don't want to deal with all of the administrative part of the business, so I will stay. In that case, I still get compensated. Another model I have seen is you stay as a consultant to
Sure.
help you, to help in the transition, to help you. I'll say, let's say for example a year as a
Right.
consultant for you, so you can utilize my know-how on how I build this business. And so and also as a consultant, to help in dealing with the clientele, so the clients will stay with you for at least enough time for you to recover your revenues.
Right.
Your
Especially, I
return.
think from a relationship standpoint, if the business especially is like, service based, and the customers are repeat customers, they've come in there for so many years and they know the owner. And when the new owner comes up, it's important to build that relationship with the new owner. If the old owner is around and still is able to build, make those connections, I think that would be a much easier transition, and a much better benefit for the new
Mhm.
owner as well. Yeah, yeah, I like that.
It is a good idea. You know what I mean? The owner to stay, but when you hear this thing about that you have to. Well, not necessarily, because me as a buyer, I might not want you around. What if the buyer doesn't want you there? I mean, I want to buy the business
Right.
and thank you. We shake hands and you move on. Then no reason to force yourself in the deal. But
Yeah.
no, there's different ways, different models available in that transition.
Understood. Yeah, that's kind of what I thought when I saw the question come in as well. Okay, so another thing comes up, and I know you've seen this, I'm sure, very many times. Is if there's a partner or a managing partner, and again, this is a situation where a possible sale is looming or it's imminent, and they have, let's say, small children. What are the top three things this business owner should be thinking about before they start planning to sell? Just to make sure that they're taking care of their family and their young children. What are key things you would recommend they start thinking about?
Mm.
So, did you hear the question? I know we're
Oh,
having
I'm
some
sorry.
minor technical thinking. Okay, I'm going to put the question in the chat for you to see. Okay. Sorry, guys, we're having minor technical difficulties. I think the viewers can hear both parties, but I think
Okay.
we're having
No.
some kind of
Yeah.
issue.
No, but we never give up. So that we'll
Don't give
find a
up.
way.
We'll do it right
Yeah,
away.
exactly. We'll push through this, and we'll find out. This is a really good question. The what are the top three key items to consider?
when during a
Yeah,
business
if
sale or a
considering
possible
selling,
business sale.
yeah, a business, and it's yeah. Listen, one of the things that you have to take into consideration is when you're selling your business is you know the and this is something I think a lot of the business owners don't realize the value of your business
Hmm.
in this business being a form of your own retirement planning as far as exit strategies. And this
Hmm.
is something very common. That's why you see a high percentage of businesses when they're ready to exit do not sell. and you will be surprised that how high the percentages of businesses that are out there right now for sale that will not sell. So if you have children in you have to, and you have devoted time and effort into in building this business, you ought to seriously, one is preparing yourself. I mean, a business, you have to, one of the areas that tends to affect the price or the value of your business is it poor accounting tends to be one of the main factors, because then you cannot prove the stream of income. um,
Right.
the other one is this: you need to start looking for to turn it into a turnkey operation. Many of the solopreneurs, one of the issues is that once I remove myself from the business dies. So
Right.
what am I buying? You got to put yourself in the shoes of the buyer. If I'm buying this business, I need to be able to buy at least a stream of income, of cash
Mhm.
flow. Now, if the cash flow is you, then I cannot buy you. You know what I mean? So how do
Yes.
you ensure that cash flow will stay there? You know what I mean?
Right.
So that tends to be another issue for a lot of the businesses, that they're not ready, because at the moment we sign the deal and I walk out of those doors, I take with me the cash flow, because it's the know-how. So how do I bring this into the business and can stay there, so then somebody else can pay for this business? Number three is having, you know and this kind of goes along with the separating yourself from the business, but at least having a way that you can ensure that there is, for example, if you have a ballet studio, then do you have at least another teacher, either
Right.
coming ready, so when me being the prima ballerina and I'm the one teaching the classes and I'm the brand, but when I walk out, I have this new teacher called Marie, and Marie is also been with me for the last 3 years. Exactly, and so Marie also knows the students. She's
Right.
very knowledgeable about the business. I have passed to Marie a lot of my know-how, so
Right.
now I have groomed Marie on my way of teaching, because I used to be a prima ballerina in New York.
Right. Understood. So that brand can somewhat stay on and continue because there's someone else that can manage that brand, the reputation of that specific business, under that person. So that makes total sense. And I was thinking if a possibly for someone who has small children is to also think about what are their goals for the family, what are the goals for the children, any trust funds that they need to be setting up, to kind of pass on some of the wealth while the business is still going and before they sell. What do you think?
Um, I, I'm so
You
sorry.
couldn't hear me. Okay, I'm gonna uh-oh, we lost Pedro for a moment. Okay, I'm sure he will be signing on one more time. I am going to put the question in the chat just until he comes back.
Sorry.
Let's see if this works out better.
Yeah, I can hear you.
Okay, so you're okay. Yes?
There we go again. But
Uh-oh. All right, I'm going to put it in the chat. The question is,
okay.
what about
Yeah, if you can
possible
put it on the private chat, I will really appreciate it.
questions?
Everything is deleted now.
Okay. Did you get it?
Okay. Yeah. Well, yeah. That's again, all of that about the transition and succession planning is
Succession
critical.
planning.
Yes, trust funds, setting up those, and the other thing to be thinking about is in I don't see a lot of the small business owners taking advantage of is employing your children in your business.
Right,
This can
right.
be another way for you to create those trust funds, because you can take those, employ them legally, and then those funds will go into, for example, either be a retirement account for for the children, and then that way you're
Mhm.
creating as a way of creating a trust fund for them.
Right.
Uh, as an idea, not that this is the only way, but I'm just saying that there is opportunities out there that it gets missed, and this is something that why it's important about tax planning, especially if you're building a business, and definitely if your business is profitable,
Hmm.
and you have to then how to protect your business. I was running through a scenario just recently with a sole proprietor, and trying to help them understand the reason why he's a single member LLC. And just to share quickly scenario that I was running with this individual, and I'm using some rounded numbers, so I don't reveal specifics of this
Of
individual, but
course. Yes, that's totally
uh,
understood.
he's a single member LLC, netting a little over 100,000 on the Schedule C, because he's a single member that's regarded, so goes into his 1040. So this individual he's single, so he's paying roughly around 30,000 between self-employment tax and income tax. And this is the part that a lot of people miss. That the reason why you need to do some tax planning, because this individual has been paying this kind of money for the last 5 years. So, and he's to be successful, has a good business, and so he's paying self-employment tax roughly around 14,000, and he's paying roughly around $18,000 in federal income tax. So you
Wow.
figure he's paying
Yeah.
around 32,000 combined. Uh, Now, by moving that and doing an election to be an S corp, then, because remember he cannot pay himself salary, so what we can do is move him into an S corp, make the election. Now, through the S corp election, now he can pay himself a wages. He pays wages of 50. He still will have the K1 with 50. Now you
Hmm.
can go, well, what is the difference? We're saving just with that one move there. We're saving annually around 7,000 approximately. So you
Right.
figure if he would have done this, it's $35,000 over the same 5 year period. And this is again why the importance of tax line. This is money that has been going out of his pocket every single year, and you can
Right.
figure that he was not quite happy to hear that this could have been done many years ago, and his prior tax preparer did not advise him about this, and he has been paying unnecessarily that additional tax.
Right.
And
Right.
and so this is again the reason why we encourage people about the tax planning to listen to this type of podcast, to go to our webinars, because you will receive this type of information that's going to help you put more money in your pocket, not more pocket. Well, you're going to need more pockets, because there's going to be more money.
That's a good one. I love it. And what if I don't know if he did that. I don't know if this specific person actually even was putting aside money for his retirement that could have also saved on his, paying taxes. I don't know if that was part of it, but I'll put it in the chat too. Was he putting money aside for retirement?
Oh, okay. And then that was another
Because if he
point. Like I said,
wasn't,
I would just wanted to share one specific, more related to the initial conversation we had about
right.
paying themselves salaries. But no, there was no retirement planning in place. There's a lot of other, and again, we did a couple. We put a couple other points for him on how to improve it.
Right.
And within a couple more moves, no, he's gonna be saving more than the 7,000. He was glad to pay the fee that we proposed to him, because again, one of the aspects that people see is that yes, that is an investment. You make that first
Right.
investment shock, but is the amount of money you're gonna be saving once this is established is stays. I mean, once we made these moves for him, now he's gonna be saving well over 10,000 a year, which he's very glad and grateful. He's upset that he missed a couple years, but he'll make it up.
Yeah, absolutely. And then just to let you guys know that, I put together one of my e-courses, and the one I said about valuation MT, based on that, that's specifically made to help you figure out how to build value into your business. And that course is available on, on my website. And at the end, the end of the course is actually how to use tax planning into making sure all of your income that you have produced is actually being invested in a proper manner using tax planning. So make sure to check that out, www.theprofitlab.biz/programs. So, and then Pedro, we have another 4 minutes left. So you want to talk about the webinar coming up?
The webinar is going to be very, it's going to be packed. So I know that there's, yeah, but I'm excited about it. I love the topic.
I'm going to put it in the banner again.
So it's going to be very, very intense. We're going to be discussing some things. I'm sure that some of them probably you have heard about it before. Some of them, I'm sure you're going to find some new information in there. This is why I'm excited about it. So there will be some, and I don't want to, I'd rather you go into the link. Go to the link, and there will tell you a couple of the pointers that will be discussed at this webinar. And I'm sure that whomever attends it will not be disappointed.
Yeah, absolutely. So if you are a real estate professional, you want to get some tax smart strategies, make sure to sign up. This is a free webinar. It's going to happen one time only. So please make sure to jump on. It's going to be Friday, 1 p.m. Eastern time. So make sure to sign up before it gets filled out. And you're going to get all the tax smart strategies that you need. So let's see. Any other thoughts? Okay, I see a comment here. I did not understand the comment exactly, but maybe rephrase it. Okay, and I'm also going to put on the banner here. So just to read it out loud. So to sign up for the webinar, please go to www.theprofitlab.biz/events-sign-up. You're going to see all the different events we have there, and then specifically this webinar. So we post all the webinars that we are doing right there. And I'm also going to put up so all the different programs that we have, all the past webinars, and the e-course that I have on how to increase the value of your business. That's going to be on www.theprofitlab.biz/program. So we have a couple more minutes. If he would get less Social Security only using 50,000 versus 100,000 annually. Okay. All right. And anything else, Pedro, that you want to cover before we hit the 30-minute mark?
No, I don't have, like we have discussed before, I think now is a good time for tax planning. One thing I wanted to warn people, the IRS is, and I don't want to scare people, but I just simply want to be prepared. And that is that IRS has hired more auditors. They even have hired attorneys, computer engineers. So with that said, you can kind of figure what they're planning, what they're preparing themselves for. So just keep that in mind. Now is a good time. If you have any kind of tax issues, another thing is that the IRS took a little pause during the COVID and post-COVID, and now as you can see what they're going in which direction they're going now. I think you're gonna start seeing more activity from the IRS and in the area of audits. You're going to start seeing more letters, more even not necessarily a full-fledged audit, but more questions, letters questioning some certain deductions that were taken and so on.
Understood. So, and guys, we did talk about how to prepare for IRS audits, I think about 5 episodes ago. Or 5 to 6 episodes ago. So you can always check that. And you can also always reach out to us directly if you have any kind of letter that you receive or you just have a question. We both offer, complimentary strategy calls. So you're more than welcome to check us out. Just go on our website and you'll be able to schedule time with us right away. So With that, we are close to we are at the 30-minute mark. Sorry, without the glasses here. Um, so with that, guys, we always close out our podcast with a quote from motivational speaker Jim Rohn. You are the average of the 5 people you spend the most time with. I hope we are 2 of the 5 people you are spending your time with to learn and grow your business. So until the next episode, have a wonderful and blessed rest of your week.
Wonderful.
Bye.
Take care.